5 tips to invest smarter. Planning for the future can be difficult, especially in this fast-paced world where it feels like everything is constantly changing. But that doesn't mean you should leave your future planning to chance. In Invest Smarter, learn about investing and the research you need to do before deciding where to deposit your money. Introduction. Welcome to the blog section of Invest Smarter. Here you will find articles and tips on how to invest smarter and improve your financial situation. We hope that you find this information helpful and that it helps you make better decisions with your money. Thank you for reading, and we wish you the best of luck in your financial journey. What is investing? Investing is one of the most important things you can do for your future. It allows you to save for retirement, college, or other long-term goals. Investing is not gambling, it's about taking risks to get rewarded over time. To start investing, you need to understand what it is and how it works. Then you can develop a plan that meets your financial goals. Types of investments. There are many different types of investments, and it can be difficult to choose which one is right for you. However, by understanding the different types of investments, you can make an informed decision that best suits your needs. The most common types of investments are stocks, bonds, and mutual funds. Stocks are ownership shares in a company, while bonds are loans that a company or government makes to investors. Mutual funds are a type of investment that pools money from many investors and invests it in a variety of securities. Real estate and commodities are other types of investments. Real estate investing involves the purchase and ownership of property, while commodities investing involves investing in physical goods such as gold, oil, or wheat. There are also alternative investments, which are less common but can still be viable options. These include hedge funds, private equity, and venture capital. No matter what type of investment you choose, it's important to do your research and understand the risks involved. You should also have a clear investment plan and goals in mind before committing any money. With careful planning and a smart investment strategy, you can make your money work for you and achieve your financial goals. There are many different types of investments, and it can be difficult to know which one is right for you. Here are some of the most common types of investments. 1. Savings accounts. A savings account is a safe place to store your money, and it usually earns interest. This is a good option if you don't need immediate access to your cash. 2. Certificates of deposit, CDs. With a CD, you agree to leave your money in the account for a set period of time, usually 1 to 5 years. In return, you typically earn a higher interest rate than you would with a savings account. 3. Money market accounts, MMAs. MMAs are similar to savings accounts, but they often have higher interest rates and may offer check writing privileges. 4. Individual retirement accounts, IRAs. IRAs are investment accounts that offer tax advantages for retirement savings. There are 2 main types of IRAs, traditional and Roth. 5. 401k plans. A 401k plan is an employer-sponsored retirement savings plan. Employees can choose to have a portion of their paycheck deducted and deposited into their 401k. There are many different types of investments that you can make. Some of the most common include stocks, bonds, mutual funds, and exchange-traded funds, ETFs. Each of these has its own set of risks and rewards, so it's important to understand them before you invest. Stocks are shares of ownership in a company. When you buy a stock, you are buying a piece of that company. You become a shareholder, and your goal is to make money by selling your shares for more than you paid for them. Bonds are loans that you make to a company or government. In return for lending your money, they agree to pay you interest. The longer the bond, the higher the interest rate will be. Mutual funds are pools of money from many different investors that are used to buy a variety of assets, such as stocks, bonds, and other securities. Mutual fund managers try to grow the money in the fund by investing in companies that they believe will do well. Exchange-traded funds, ETFs, are similar to mutual funds, but they trade on an exchange like a stock. ETFs often track an index, such as the S&P 500. When it comes to investing, there are many different options to choose from. It can be confusing trying to figure out which type of investment is right for you. But don't worry, we're here to help. In this blog post, we'll go over some of the most common types of investments so that you can make an informed decision about where to put your money. 1. Stocks. Stocks are ownership shares in a company. When you buy stock, you become a part owner of the company and are entitled to a portion of the profits, or losses, that the company makes. Investing in stocks is one of the most common types of investments, and can be a great way to grow your wealth over time. 2. Bonds. Bonds are loans that you make to a company or government entity. In return for lending your money, the borrower agrees to pay you interest on the loan over time. Bonds tend to be less risky than stocks, which makes them a good option for investors who are looking for stability. 3. Mutual funds. Mutual funds are pools of money that are managed by professional investors. When you invest in a mutual fund, you're essentially investing in a group of stocks. There are many different types of investments, and it is important to understand the risks and rewards associated with each before making any decisions. Here are some of the most common types of investments. Stocks. When you purchase a stock, you are buying a piece of ownership in a company. Stocks tend to be more volatile than other types of investments, but they also have the potential to provide higher returns. Bonds. Bonds are debt instruments that are issued by corporations or governments. They typically offer lower returns than stocks, but they are also less risky. Mutual funds. Mutual funds are collections of different stocks and bonds that are managed by professional investors. They offer investors the ability to diversify their portfolios and participate in a wide range of investment strategies. ETFs. ETFs are similar to mutual funds, but they trade on stock exchanges like individual stocks. This makes them more liquid than mutual funds, but they also carry additional risk. Options. Options give investors the right, but not the obligation, to buy or sell an underlying asset at a set price. They can be used to speculate on the direction of the market or to hedge against losses in other parts. Best advice for investing. When it comes to investing, there is no one-size-fits-all solution. However, there are some general tips that can help you make smarter investment choices. 1. Have a plan. Before making any investment decisions, it's important to have a clear investment strategy. Ask yourself what your goals are and how you plan to achieve them. 2. Do your research. It's important to understand the risks and potential rewards of any investment before you put your money in it. Be sure to consult with a financial advisor to get started. 3. Diversify your portfolio. Don't put all your eggs in one basket. Invest in a variety of assets to minimize risk and maximize potential returns. 4. Stay disciplined. Once you have a plan in place, stick to it. Emotional decisions can lead to costly mistakes. 5. Review your investments regularly. Keep tabs on how your investments are performing and make adjustments as necessary. Following these tips can help you make smarter investment choices and achieve your financial goals. Conclusion. There you have it, 5 tips on how to invest smarter. By following these tips, you can make your money work harder for you and achieve the financial goals you've set for yourself. So what are you waiting for? Start investing today. Thanks for watching. See you on the next episode.